But the ones that should benefit is going to be the insurance sector. Most of those guys, sure, there's going to be weather-related issues that hits them, but they have reinsurance to cover that. Most of the insurance stocks, well, you kind of have to do a PhD to understand their risk return. But all said and done, most of them are relatively cheap and unloved. And investors, especially fund managers, have to have a certain amount of financial sector exposure. So as money comes out of banks, the insurance sector will benefit from it. So, the ugly ducklings like IAG, like QBE, these guys should have a pretty good cycle. I think the reflation cycle plays out for a number of years, and these insurance stocks have premium rising cycle, and they should continue to benefit from it.
From an income perspective, I can see your point. What about the natural hazard risks that we've got at the moment? Of course, we saw the flooding at the moment, in parts of the country, other natural disasters as well. Reinsurance has obviously got to be a big part of that. Is something you've got to go and see as well as an investor?
Yeah, look, it's, you don't, there's a reason why even the Buffett lovers, go by the theory you stay away from insurance and airlines, and even Warren Buffett goes back into them every so often to get hurt. Look, I think the insurance sector is pricing that in, and that risk is, I remember from the times I used to live in the US, you get to July, August, you're almost certain to have a weather risk somewhere in the US hit you. And I think the markets know that. So I don't think that's going to be the huge issue. I think premium rising cycles are going to play out for years to come. I think the climate change is real and it's playing out and it can't be ignored. I mean, hell, we've got 1 in 100 year flood every couple of years. So it's just not going to go away. And I think the insurance sector will start to price that into the premiums.
Let's turn to a sector we were talking about before the Ukraine made it worse, which is food prices. It was already going through the roof, supply chain, the cost of freight, everything is pointing towards food. And for some countries, that's like 60 to 70% of CPI.
Yeah, and it's getting ugly. I mean, you look at a lot of, I think the damage is going to be in the emerging markets. A lot of those economies, as you well know, are already facing weak currency. So when food prices are going through the roof and your currency is weak, it's just going to make it worse. You can already see a number of those emerging markets curbing exports of food products simply because they might not be able to feed their population, and that just makes things worse. So food prices are nearly all-time high, transport costs are really high, and any kind of pandemic waves that just makes it even worse. So I don't think this is a problem that's going to go away. I think this problem existed before, as you said, and it's made worse now. And I think over time, with the currency problems, it'll get even worse. So I think the food products play really well, but it's really hard to pick a food producer at the moment because, as you said, transport cost, input cost, weather risk, all of this makes it really risky to invest in a food producer of specific food, everything from fish to almonds to grains. I mean, the grains probably doing the best, but most others are struggling in the context of costs going up. But the guys who provide services to them are doing really well. I mean, have a look at elders, have a look at the chemical sector. They're all, anyone who's servicing the agri-food services play are doing really well.
Gold, when it hit close enough to record highs again in US dollar terms, and then came back to earth with a thud again. Double top, or we got more upside to come? What's your views there?
Yeah, I was very surprised by the initial run. You just don't want to see anything run that hard, that quick. We've been positive on gold, and that's taken a while, and it's turned around. I think the US Fed was I remember reading all the comments about how gold was going to get smoked after the US Fed puts up brakes. Well, it didn't. It's actually going back up. I think the gold price continues to climb here. I think it climbs gradually. And if you look at most of the gold miners, their cost base is, relatively low. They're churning out a lot of cash. And the lesson we learn from things like coal and iron ore, when things go bad, people carry a lot of debt. And when the commodity price works in your favor, it only takes 6 to 12 months, when you turn from a leveraged dog to a dividend-paying gold. So in that context, these stocks only need 6 to 12 months, and then suddenly the balance sheet looks great, they pay dividends, and everything looks good. So they're generating a lot of cash, and I think this will play out over the next 6 to 12 months at least, if not longer. And I think the Aussie gold miners, they don't have the sovereign risk. They should be doing quite well over the next 12 months.